Hi, everyone. You're watching episode 72 of Yield TV. Hey, everyone. Thanks for tuning in. It is Wednesday, February 10th, 2021. And today we're going to talk with the co-founder and COO of CoinGecko, Bobby Ong. So Bobby, thanks for joining us and welcome to Yield TV. How are you doing?
I'm doing very good. It's the eve of Chinese New Year. It's a great pleasure to be invited to come onto Yield TV. I love what you do with your YouTube videos, and very honored to be able to join you today.
Oh man, thanks so much. Yeah, I'm gonna pretend like we didn't just talk for 15 minutes and like I was very honored myself to talk with you. I've really admired what CoinGecko has stood for over the last few years, especially, but I've really, I think, been closer as a user of CoinGecko because of the fact that you all leaned very heavily into DeFi, which I want to dig into the origin of all of that. But I remember, I think it was probably fall 2019, where I really found myself starting to rely upon the data that you guys put out. There's the obvious sorts of things like just looking at, market caps, but we're going to talk about all of the fantastic DeFi tools that you make available. And also too, worth noting, I almost forgot this until we set up the interview. Bobby has actually been an investor in Zapper, so we're very grateful to have you along for the ride, and especially having your strategic insights to add to the team. So, anyways, Bobby, why don't we start with tell us the epic story of how you guys started CoinGecko? I thought it started back in 2017, but and I had heard bits of this that it was clearly a part-time gig. And anyways, tell me all about it. How did you ever get into crypto, and then when did you start working on CoinGecko?
Yeah, so a lot of people didn't realize this, but we actually started CoinGecko way back in April 2014. So,
oh my gosh. Oh,
yeah.
Wow. Oh, I was new to crypto in 2017, so that's my defense on that. But yeah, wow. Oh my gosh, it's been a long ride.
So it's close to 7 years now. Yeah, wow. 7 years. Close. This April we are 7 years. So there's if you go to Bitcoin Talk and you maybe search CoinGecko, there is an original thread from 8 April 2014 that kind of announced we launched CoinGecko. I mean, it was modified a little bit over the years, but yeah, there's the date that was there. There was a thing to launch crypto sites on Bitcoin Talk back then. Yeah, so every site was launched. So TM and I, we kind of got into Bitcoin back then quite independently of each other. We didn't know each other back then, but sometime in 2013, for me at least, was 2013, I found out about Bitcoin in a lot of programmers forums, Hacker News to be specific. Actually, a lot of people were talking about Bitcoin. A lot of Silicon Valley VCs were talking about it, this new form of money. I got a background in economics, and I was always curious why my lecturers did not talk about Bitcoin in university back in 2009 to 2012. We talked a lot about the financial crisis of 2009, but not a single mention of Bitcoin. So I was curious, what was this new form of money? Why did my lecturers talk about it? I guess I was way too early back then, I suppose. I bought Bitcoin, kind of moving around, and then decided that, hey, this is interesting. I think my mind was kind of opened up quite significantly after I read the BitShares white paper in 2013, where it kind of talked a lot about the smart contract platforms that will revolutionize how money and value be transferred across the internet. Of course, BitShares didn't take off, but the idea behind BitShares entirely in the white paper was kind of represented in the Ethereum white paper, and what we are seeing now is kind of what I read in 2013. So I'm really happy to see all these things coming to life and fruition. So and anyway, back in 2013, there's a few coins, nowhere near what we see today, and we wanted a way to sort of fundamentally evaluate all these coins. So we started our website. Back then, websites were really bad. Reminded us website from the GeoCities days, so badly designed. This was 2014, but websites reminded us of the time when we started using the internet in the 1990s. I was like, I kid you not, websites back then, Bitcoin websites back then, like they had like weird design, like GeoCities days kind of designs. It's really bad. So I said, like, I'm sure we can do a better job than this. So we kind of put together a website, kind of get this information for price. I think we started website with only 20 coins and started growing and adding. And you're right, it was kind of a side gig for us. Both TM and I kept our jobs because we never knew, right, how big this industry would be. We thought, I mean, for us, we were passionate, we were interested in the space. We knew this would be something big someday. But when that someday will come, we have no idea. So kind of kept our jobs, learn what we can do. And I think the turning point for us was sometime in 2017 when that was the big bull run where Bitcoin hit $20,000 and Ethereum hit 1,300, 1,400 or so. We started seeing a lot of people coming to the website, increasing a lot of get a lot of traffic, and then it was the two of us, and then we had a side job. So TM quit his job first, started working on like getting the site to not die, to stay alive. And then towards the end of the year, I started going full time as well. And in 2018, we started hiring our first staff. First guys. Wow. and then we've been pretty conservative in adding people because we were hiring for fit. We did mostly through referral and friends, and over time we've been growing, and now we have about 25, 28, close to 30 people if we include all the interns and part-timers and all. So that's kind of where we are, still trying to grow, and yeah, that's the story of CoinGecko.
Crazy. And remind me, what were your jobs before this? What were you guys working on?
Yeah, so TM was working as a software engineer, software developer, was doing some freelance jobs and all. And I was working in marketing for a real estate company in Malaysia.
Wow. Well, and so, okay, so you guys get into crypto. You basically built CoinGecko because you were trying to find like a way to analyze something about the markets. You basically built a product to serve, yourselves, right?
Pretty much, yeah.
Yeah. I'm curious, does that spirit sort of carry forward into today? Just because I know we want to dig into how you eventually pivoted so heavily into DeFi, and I'm curious, do you still feel like at times like it's like, are we building for everyone, or are we? We're building products that serve ourselves. It's just the community behind you has grown so much.
Yeah. I think it's the same ethos from back then and today. Like we had a problem, and the problem was, how do we track these sort of different metrics for all the different currencies? So we kind of decided to, hey, if we are collecting this information to do our own analysis, why don't we just put it up as a website and to help others as well? Because if we face this problem, then others are probably facing the same issues as well to collect all this information. So back then was a lot of social media and developer stats monitoring, price tracking, and also that's kind of what we do. So we kind of always try to solve our own problem, because I think we are quite representative of the users in the space, and it's the same for today as well. A lot of the features that we roll out pretty much things that we would like to see for ourselves and would like to solve for ourselves. So that's kind of what we do, and I think the things that we are doing is quite right. Like a lot of people feel that the features that we push out help them as much as they help us ourselves as well.
Absolutely. Bobby, do you think it makes more sense to start to walk through some of the most helpful parts of CoinGecko, or we could also talk about your guys' journey into discovering DeFi and then walk through CoinGecko? So whatever you prefer.
Yeah, I guess I can share my screen, walk through some of the key features of CoinGecko, and then we talk.
That'd be great. Yeah, once you share it, I'll put it up on screen here and let you know that it's working.
All right. Do you see it?
Yep, there we go. You're all good to go. Yeah, so talk me through what are the main parts of CoinGecko? I know this as a user, but thinking about the folks that are new to CoinGecko and DeFi.
Yeah, so here's kind of the homepage of CoinGecko. We sort coins by market cap, and kind of things that we like to see ourselves is the 1 hour, 24 hours change, or 7 days change. So that's kind of what we do. We have the ETH gas price here because kind of find time that is kind of low gas for us to kind of send transactions. We like the total market cap over here to see. My personal favorite is I maintain a portfolio of coins. You can see I start these coins, and these are the coins that every morning I wake up and I kind of on the mobile app and I go in and see what's the price performance of Bitcoin's 44K. It went 4.4% last 24 hours. Ether went down 4%. So I kind of scan through and then kind of like see, Aave is like my favorite coin, is 515. I think it was slightly below its all-time high yesterday. So I have Sushi as well. And some of the other coins, I kind of scan through them as well. So yeah, that's how we kind of roll out a pie chart recently. So like you can kind of key in like how many coins you buy at what price, and then it kind of builds this pie chart for you to see. I didn't key all this information, so like everything's zero for me, but like you can kind of key in those things and see how much your portfolio is worth on a day-to-day basis. I think one cool thing that we kind of roll out recently, let me just show it for you. I'll click the wrong one. Was this? So we kind of add this to MetaMask button. So if you click on this and you have MetaMask installed, like it will show like a simple pop-up where you can click add, and it goes to your MetaMask. The problem is because like a lot of coins, they're not tracked on MetaMask, and you kind of have to copy paste this contract and paste it onto MetaMask, which is kind of like a pain, like to repeat this. So I think we wrote this copy contract thing, I don't know, a few months ago. We were kind of like copy pasting this onto Uniswap so many times, and like, this is kind of annoying. What happened was we kind of click onto Etherscan, copy the contract there, go to Uniswap, and I was like, why do we have to do that? Let's just simplify the steps. So that's what we did. And the same for MetaMask as well. Like, why do we have to copy paste, and can't we just automate it with the button? And that's what we did as well over here.
These features, many people will take them for granted if they're newer to crypto. But I mean, I can attest that like just the contract address there and being able to add that to MetaMask and just having like a source of truth here, it's very, very helpful. I do feel badly for all of you because I always think like, man, the pressure's on. Like, I mean, you have so much website traffic, like you got to get this stuff right. And like you tend to be the first, which is actually, I guess like a follow-up to all of this is like, how do you guys get up this information so quickly? It kind of boggles my mind because obviously at Zapper, we're in a similar boat, but different. You know, I mean, we can only add so much so quickly, but I feel like with you all, like Tornado Cash issuing Torn, you had it up, I mean, literally as the token was going live. So like I was tracking it on CoinGecko. So anyways, how do you do that? Do you automate some of this or?
So I think a lot of them relies on community feedback to us. So, I mean, there's only so much that we can do tracking the newest coin, newest farm and all these things, but we do our best, I mean, as participants in the space, but like, honestly, a lot of the information comes through the community, like people who use CoinGecko for the team themselves. They will just write to us in email or Telegram and say, hey, this new coin is launching up, like, yeah, you know, and then we're like, okay, sure, please fill up our form, and then we get this up as fast as we can on the CoinGecko. So a lot of information comes from CoinGecko. New exchanges gets added. We have a flow where we can track new exchanges trading these coins. So we have a flow that we add this up on a regular basis, but sometimes we miss them out, and then community or the team we rely a lot on the team to kind of ping us like, hey, can you get this information up? This is wrong, this is right, and then like all this back and forth like help us to maintain accuracy of the website.
Wow. Bobby, could you talk us through the trending tool? Or it's what happens is maybe we should actually show it. When you click on search in CoinGecko, here we go. When you click on the search, yeah, there we go. It shows trending search. And I mean, I got to say, like, when this first launched, I like kind of didn't pay attention to it. And then over time, it has become something like I clearly pay a lot of attention to. I just find it interesting. Like, I don't know if it's being gamed by anyone, by a community, just, you know, clicking over and over and over again, but it does signal to me that people are looking at some of these tokens.
Yeah, so we have this search bar for some time, and then we kind of discuss internally what would be cool is to see what are people searching and to see which coins are being searched upon. So we kind of put in place a tracking system and a counter basically to see which coins people search and which one will click upon. And what we did is this come out as a trending search, and we kind of sort them out with at the start was just a simple count, right? But there's this ruling or there's this law in crypto, but I think it's for everywhere else as well. Anything that gets measured gets manipulated after some time. So you're right. A lot of people are manipulating our trending search. Initially, they use pretty rudimentary method, like just getting a bot to kind of like just search it constantly. So that was pretty simple. We find a way to kind of stop all these bots, but then things get more sophisticated, and we have to always kind of find a way to up the game. Lately, what we noticed as well is some of these guys started getting the community to kind of like spam our search box and kind of like search so that the counter goes up and it appears on the trending search. What we do is if we notice some coins doing such things, then we will just have a manual ban on some of these coins. So if someone from the community shares, hey, this coin so and so, like they're doing some campaign and they're paying people to search and then give out some lucky draw to some random follower, we just like have a manual ban and just remove this coin from the trending search. We just don't want to encourage such behavior. I don't know, maybe there may be one or two that could be a bit weird from here. I'm not so sure, but like otherwise, like Pancake Swap seems pretty reasonable that they are being searched upon. Like Binance Smart Chain is kind of getting like everything like the buzz in the past couple of days. So yeah.
Yeah, this looks the trending search to me, not knowing all of them, but knowing, I'm not surprised Cardano's showing up in there, and then Matic having rebranded to Polygon, it's no surprise. So yeah, it's interesting. It's worth looking at for sure. Bobby, maybe you can talk to me about when did you all as a team really start to get interested in DeFi? And then maybe we can talk through some of the tools that you all have built after that. I also want to remind everyone that as we talk through this, let me just quickly share my screen. So there is a great resource if you're new to DeFi called How to DeFi. So this is a digital book that they wrote. Anyways, you can get your copy here, and it's great. I mean, there's very few people that have written a book about DeFi, want to learn more about how did you all get interested in DeFi?
So I think we have like a couple of interns now called Daryl and Darren. Everyone knows them, the Lau brothers, right? So they sort of came up to me in a meetup that we organized, a Stellar meetup that we organized in 2018, early 2018. They were studying in a local university in Malaysia, and they came up to me and said like, hey, can we kind of intern at CoinGecko for a month or two? And I said, yeah, we never had any intern. We were just hiring our first staff in 2018. I said, yeah, come in and just see. So those two boys turned out to be some of the smartest guys we've ever met, and they built a name for themselves. They, of course, they're now working in Spartan and Mechanism Capital these days, but they were really into crypto, and they were very deep into DeFi. So they were very early participants of Synthetics, Aave, and of course later on Wi-Fi and all those things as well. So
wow.
Darren, they spent a lot of time in the governance forums and the forums and governance and chat group Discord by all these DeFi applications. So they were really early in this space, and they were aware of these things, and they kind of educated a lot of us in CoinGecko on to look into DeFi. So because they were so deep into it, and Darren came back for a second internship with us sometime in 2019. Yeah, we released this last year, right? 2020, I think so. Yeah. So when they came in like 2020, and I said, oh yeah, and I was thinking, what task can I give this guy? He knows everything about crypto already. He's so smart, right? So I said like, okay, I think I knew what's the perfect task to give to this intern, right? Something that's challenging enough and is good for him, for his resume and all. I told him like, Darren, why don't we write a book on DeFi? like, since you know everything in your head, why don't you just translate all those things like a beginner's guide to DeFi, if you may, put them into a book. I mean, information is free, it's available everywhere, right, online. But like, I mean, for a beginner, like to come in and to kind of find out which are the top apps, and then to go around online to read a tutorial, that's kind of daunting. And packaging them all into a book might be something useful. So Darren came in and said, okay, yeah, sure, we can do that. So he kind of led the project, and a few of our analysts, I took part as well. We kind of wrote a chapter for ourselves and kind of provide a step-by-step guide onto all these different DeFi apps. So yeah, synthetics, put together, DYDX and all those things. So kind of went through it, and I think like Uniswap was in there as well. And anyone who read our book and followed the tutorial when we publish it would have gotten the 400 Uni airdrop, right? That's now worth like $8,000, right? So that's great value for money, right? So if you bought that book. Yeah, so that's kind of the story of how the book came about. And the book's written like a year ago, was published I think in March 2020. A lot has changed in DeFi since then. This was way before the yield farming craze and all. So we know the book's kind of up for an update. The team's working on an update. So kind of like this book there'll be a refresh of this book and a second book with a more advanced topic on DeFi with all the other apps that we didn't have a chance to cover in book 1. They'll be on book 2. So that's coming out hopefully in Q2 this year, and very excited for things.
Yeah, I can speak to the convenience of having a book to really like learn everything as you're getting started. When I was getting into crypto in 2017, amidst all the podcasts I was listening to, which was mostly Laura Shin at the time, I did buy this book called Crypto Assets by Chris Berniski, and that book took me from really not being able to string a sentence together about crypto and trying to explain it to friends. But once I read that book, I was like, I felt like I had completeness to a lot of the concepts I was trying to wrap my head around. I was starting to be able to explain, like, this is why a decentralized network is so powerful. And, this is why, at the time I was explaining Bitcoin and Ethereum. This is why they're more powerful than any other sort of ledger or database. But I would highly recommend to anyone that book I thought was a great place for me to start. I don't know nowadays, like, I wonder if people really do need to ever go through like the story of Bitcoin to get into the space. I think there's an argument to be made that you can just hop right into DeFi and learn it all. But if you're gonna, I would say what's complementary to Crypto Assets by Chris Berniski is this how to DeFi. And then from there, watch Yield TV and some tutorials that we do, stuff like that. So, and
of course, watch DeFi Dad's video, right? I mean, I have to say that like your YouTube videos really help us a lot in understanding DeFi as well. Like I personally learned from your videos on how to yield farm on some of these yield farms. I wasn't very certain at the start, but was a bit, maybe Darren of course were in, but like I was a bit confused at the start, and then I kind of like watched some of your videos, and then things just clicked to me, and I was like, okay, I'm gonna yield farm like crap loads of stuff, put in money and start doing it. And then I think there's like a no turning back ever since then. And then like, so yeah, I have to say, like I tell all my guys as well in CoinGecko, especially the new guys, to watch like your YouTube videos and understand what is DeFi.
No, I really appreciate, like I said earlier, high compliments coming from you to hear that. What do you think are some of the reasons that the light bulbs went off in your head with DeFi? Like, do you recall like what were some of the turning points of like what it is that you learned or discovered that where you were like, hey, like this isn't a trend, like this is something that's here to stay. DeFi is definitely like something with strong product market fit.
I think a lot of the traditional financial applications are being replicated in DeFi. So that was kind of a big thing. I think Uniswap was a big light bulb as well. Like before, Uniswap's not the first decentralized exchange, right? There's Ether Delta before that. There is Kyber. There is 0x to some extent. So they are not the first. But I think Uniswap's the first DEX that brings in real simplicity for the average user to really understand, to really make use of a DEX. I mean, with Ether Delta, I used it before. It's kind of a pain, like order book based DEX. Good idea, but very hard to use for the user. Most people will understand. People just want to swap, and there's also the problem of liquidity, right? Like Uniswap it solves the liquidity problem for the long tail of coins, the altcoins. Right. So you just need to provide liquidity. Anyone can provide liquidity, and then it opens up the market. So I think there's a few. I think Uniswap's kind of a big turning point. So the AMM model, and I thought the AMM is, the more I read into it, like that seems very fascinating. I mean, there are drawbacks, of course, but like it serves its main purpose of the long tail of the coins very well.
Yeah, so, yeah. Uniswap for me too was that was a big turning point for me, but man, also Compound. Like,
yeah, I agree.
I had wrapped my head around Maker. I had never opened a CDP, and so this was the summer of 2019, and then I tried Compound. It was because I was working on the Ethereal Summit, and I felt kind of somewhere between like embarrassed and almost like it was my responsibility to try some of these things, as I was like setting up talks and trying to craft narratives that we should be displaying with talks on stage. And man, I tried Compound. I put in exactly 10 DAI, and I was like, whoa, holy cow. Like, because I did the thing everyone does in crypto. I started earning interest. At the time, it was like 20% annualized on my 10 DAI. And I was like, if I put in 1,000 or if I put in more, I would still earn 20%. And that would be, and then I start, you're doing the math and you're like, oh my God, like this is amazing. I wonder if there's more stuff like this out there. And it just quickly hit me. I think the world has been terribly wrong about the fact that this is not hard to use and it has huge reward. It does have risk. Why are we not talking about this? Why are we not showing people like how to use this? And anyways.
Yeah, for me, it's the same as well. Not so much on the yield, but for me was Compound had the same effect. When I saw Compound, in the sense that Compound for me shows that how DeFi is democratizing financial services that were only available to rich individuals before this. So if you talk to wealthy individuals, the 1% of the world who have private banking services, their bankers are offering them pretty much what Compound is doing. So they have money which they buy assets such as shares in like companies or mutual funds. And what they do is they can take these shares and then draw out 70% of them as cash, which they can use to spend on their whatever they want, or take that money and buy more of these mutual funds. And the private banker will say that you can repeat this 5 times. So you take like 70% of the funds and you put it into the next mutual fund and draw the remaining 70% and put it in again. So it's kind of like Compound. You take your ETH or your WBTC and you put into Compound, you draw out whatever the collateral ratio, 50%, 70%, you take it out in USDC or USDT, and then you can kind of buy ETH or WBTC and then rinse and repeat this a few rounds, right? So for me, there was kind of like a light bulb moment. Like this was previously not available to any individual, but only the rich who can do this thing with their private bankers. But now with Compound, you can take your asset and make them work harder for you. And that to me was a light bulb moment. This is really democratizing finance, because it seems really unfair that the rich have tools where they can get richer, but these are tools which are not available to the ordinary guy, because the powers to be thinks that it is too dangerous, too risky for the ordinary guys. But I thought that was really unfair, and crypto or DeFi really democratizes this functionality.
Absolutely. Yeah, very well said. It's all about giving more people access to these sorts of better opportunities. It's the ability to borrow and to earn higher interest rates, and just to earn more yield on whatever asset it is that you own. And that it's part of the reason Stani from Aave always talks about this, that it's about making they're focused on making markets where there were no markets before and creating that liquidity. And that could be personal tokens in the future. That's being able to borrow eventually against, NFTs. There's so much upside in this space. The funny thing is, I know you've probably heard the same thing. People will creep into the DeFi space, and this is normally someone who maybe doesn't have a background in traditional finance, which I don't, but I guess I've learned a lot. So they'll say, so why are they moving money around just to borrow and make more money? Like, this feels irresponsible, or I've heard people just describe it as like, it's ridiculous. And I was like, hi, welcome to finance. This is how it works. This is why people enjoy their job on Wall Street, because at the end of the day, they're just, in many cases, they're moving money around. They're earning XYZ for a client, and then they're taking a fee. And I'm not painting them too as like being evil. I'm just calling out what it is. So what happens when you remove those people and you automate all of this with money software? And that's what we get with DeFi. It's a digital finance infrastructure. But Bobby, so when you think about where we are today compared to like 2017, like, why is it different this time? What's so special this time about this product market fit? Like, there's definitely a lot of people with PTSD from 2018, 2019 who are, we've already heard them saying like, oh gosh, like, the market's gone up quite a bit. We're going to have this 90% correction again. Not saying that won't happen, but I guess what I'm more emphasizing is like, how do we capitalize on the momentum that we have? And like, why is this different this time? What's special?
I think it's two main drivers this time around. The first is the institutions are in this time around. In 2017, there was no institutions in crypto at all. So like, if you look at it, like the infrastructure, Wall Street is being involved. You have large corporations like MicroStrategy buying Bitcoin in the billions, like $1 billion worth. It's now worth $3 billion worth. Square has purchased, Tesla purchased $1.5 billion worth of Bitcoin. Bitcoin futures is traded on CME, and CME just launched Ether futures early this week as well. So that's kind of a big thing, right? So it's very Bitcoin centric. The narrative is very store of value on Wall Street these days. But it's just a matter of time before they move into Ether and the other DeFi coins, right? Because they have to start somewhere, and the store of value narrative, which is a narrative that we in the crypto guys have been talking about since like since 2013, since 2014 and all, right? It's the same narrative that Wall Street is talking and pushing right now. So there's a lag time, of course. So we start with Bitcoin. Eventually, the MicroStrategy. Once like a lot more companies, once you see governments start holding Bitcoin, then companies like MicroStrategy will start diversifying their holdings into Ether and other DeFi coins. You start seeing Grayscale Trust. They have it started with Bitcoin, and then they have a few other coins. Recently, they started having Aave and all these other coins as well. So that's kind of another move towards institutionalizing stuff. The second big difference between 2017 and now is that back then there wasn't any real DeFi applications. This time around, there are DeFi applications like Uniswap, Compound, Aave, and many others. And these products have product market fit. They have real users using product, putting money in there, utilizing them every day. And these products are generating cash flow as well. So if you look at SushiSwap, there is cash flow going to the token holders, and you can you can do a DCF model and come out with a fair valuation for SushiSwap and what it would be a good price target for SushiSwap. And that's the same for all these other applications. So yeah, those are the two big differences between back then and now. And I think this will further accelerate in the coming years as more innovations come about.
No, well said. Well said. Bobby, what are some of your favorite metrics to gauge the growth of DeFi? The most popular one I think we all use, and I was so excited when you guys added it to CoinGecko, is total value locked. But curious, like how much stock do you put into total value locked? And like, do you look more at the market cap according to circulating supply or fully diluted value? Like, curious if you have any theses on any of these metrics.
Yeah, maybe I can share some of my screen and
Oh yes, please.
So I think we have this tab, the DeFi tab, where I think we have basically a coin of all the DeFi tokens up here, including Chainlink, Graph, and all. So you can see a total DeFi cap. I think one metric that people are monitoring quite actively is the DeFi dominance versus total coin market, total market cap of all the coins. And this 5.3% is. I saw this being quoted in the Morgan Stanley deck recently.
Really?
So that was kind of interesting. Yeah, they quoted this 5.3%.
Wow, that's cool. I noticed. I think Stani was like tweeting about this, and I know I've heard Santiago talk about this before. So I always wondered, like, where did they get that metric from? So the secret's out. It's on CoinGecko.
Yeah. Yeah, I think I saw that tweet from Stani as well. I think he tweeted last night or something. So,
yeah. So we've got, okay, so total value locked there. Is the total value locked you're showing, is that like the same as DeFi Pulse, or is there some double counting in there?
Yeah, so we source this number from two sources, DeFi Pulse and DeFi Llama. So for those that's available on DeFi Pulse, we get it from DeFi Pulse, but they're a bit slow in updating coins. So DeFi Llama has a more comprehensive list, and we started adding more of this TVL data from them. So yeah, to your question, we have a fully diluted market cap, and a lot of people were asking us for market cap over TVL ratio. So we kind of like did this, like we take the TVL for Aave and market cap divided by the TVL to see. So the lower the number is, the more attractive this coin is for purchase, I suppose you can think of it that way. Some people look at market cap, some people look at the fully diluted valuation over TVL ratio. So you can see this as well. Yeah, for Aave, we get the data from DeFi Llama.
That total value locked you quoted too, like that's based on that's not just on Ethereum, then that's including Binance Smart Chain and actually I'm curious, like Cosmos, what has Kava, and I'm not sure of any other projects, and then I've failed to keep up with whether anything is actually live on Polkadot or whether it's all just building phase.
We have to check what's the methodology that DeFi Pulse and DeFi Llama. I'm not too sure if they are taking in from the other chains at this point in time yet. But yeah, it's just going to get more complicated. And it's a challenge that we are facing as well. Coins are being represented on multiple chains, and layer 2 solutions like some coins are being traded on like XDAI and Matic network. Like, how do we track? And then the price is like, there's all these complications. Like we are entering a world of multi chains, coins on Ethereum, coins on Binance Smart Chain, coin on Polkadot, and it's like Tether, right? It's like the issue on Tether. Tether's issue on the Bitcoin network via Omni, on Ethereum, on Tron. How do you track all these things? So that's kind of.
Bobby, I'm curious. We were talking for a moment there about the fully diluted valuation, which I love. You make it readily available. I never really thought as much about that metric. I definitely focused more on just the market cap according to circulating supply. The fact that you all are so popular, I mean, the website traffic you draw, and the fact that it's so readily available, I guess, like, I don't know if you've looked into the metrics on the website, but like, I'm curious if there's any way for us to tell, like, is fully diluted valuation becoming that much more of an important metric? You know, I mean, one thing about Aave is, I guess, I don't know when we'll hit that fully diluted valuation. That's one thing I don't know about most of the protocols. Like Curve, I think, is what, like 4 years to get out to there, and then the Uniswap, I can't even remember. But yeah. Anyways, like, any thoughts on it, FDV? Like, is that a metric that the DeFi community is adopting?
Yeah. With regards to fully diluted valuation, yes, that is a metric that is widely looked upon, especially among the investors. The reason is it comes from the traditional financial space as well. Like when people look into valuation of startups or companies, and they look not just at the market cap, but they also look at the fully diluted valuation of the company. So that sort of come upon into crypto as well. You're right in the sense that it's not exactly one-to-one comparison, because the fully diluted valuation, the max supply for different coins will be reached in different years, right? So curve is in 4 years time, but some could be 10 years, some could be 20 years, some could be an infinite growth. So that's kind of how where things get hard. But like you can see that the market cap is only like $667 million for curve, but the fully diluted is $10 billion. That seems pretty high for some, but I mean, different people may think differently. So I think why people look at fully diluted valuation is because like some coins, they may have a very low market cap, but they have a lot of inflation in the early days. And what may seem cheap because it has a low market cap may not necessarily be a very attractive value buy because of the high inflation of the tokens, where tokens are given out at a very fast rate in the first year or two. I think Curve was a good example where a lot of inflation took place in the first year or so, and what was initially a very low market cap actually turns out to may not be such an attractive buy. So I think people use that sort of like a sanity check as well to see what are not just rely on one value, I suppose.
Yeah, there is an investor. His name is Ian Cassel, Cassel. He's been on the DeFi podcast a bunch. He runs this thing called Microcap Club, and I think I'm saying this properly, that they focus on, it's normally non-US based companies, and they're based normally in like, I think the UK and Australia, and they tend to look at them. These are smaller market cap companies, but a lot of the lessons that he talks about apply, I think, to the DeFi space. And I think it's no surprise, Tom Shaughnessy, I think he's in the Microcap Club, and I feel like Delphi Digital has applied some of these theses. Anyways, point of saying all of that is, I wish I could remember. He gave like 3 points of like when he chooses to change his investment theses, and one of them was something has become that overvalued. That's one of the reasons he will actually bail on an investment. He makes very concentrated investments, maybe like 4 or 5 a year, I think he had mentioned. And so fully diluted valuation to me is really interesting because we get to look at it, and that's something that I'm always like trying to discern. Well, is this ridiculous, or maybe like fully diluted valuation with DeFi related projects, is less applicable, if it's 4 years out, 10 years out, especially because so much is going to change in that time. But anyway, I tend to normally focus on the how-tos with DeFi, but when I think about CoinGecko, you guys get me thinking about all of this with the market.
I think fully diluted is a metric that one should look at together with the market cap to look at both. Right. I mean, we don't do that much analysis as compared to what the Delphi or the other investors look into it. Those guys, they're really deciding where to allocate their capital and where's the best risk reward return and all, right? So those guys, I've seen some of these conversations, like it's a lot of market cap, and then what they do is this market cap over TVL, fully diluted over TVL, and then they do a comparables. So like comparing Uniswap against SushiSwap, like which one has a lower ratio. Then you decide, like, do you want to go, Uniswap or SushiSwap or both, right? Which one you have to pick your horse, right, to bet. But I think DeFi has grown quite significantly, such that looking purely on just market cap over TVL or fully diluted valuation over TVL as a ratio for all DeFi tokens is not the best way to look at things. For example, if you are comparing decentralized exchanges, the metric that you should be looking at would probably be exchange volume over market cap, or the other way around, full diluted valuation over exchange volume, for example, for both Sushi and Uni. The TVL is useful, but the volume is more important because the volume drives the fees, which is attributed, which is then given to the token holders. So that would be a more valuable metric to look at. If you look at lending and borrowing platform, the TVL is useful, but what would be more useful would be the borrowing amount over the market cap, borrowing amount over the FDV, because the borrowing amount would determine the fees paid to the token holders again. So that would be the fees paid to the protocol, which is then distributed to token holders. So that would be a more useful metric to look at, and these are things that we have to find a way to do it. All these things. So that's what I would say. There's a lot of nuances when comparing coins. It's not just one size fits all for all these metrics.
Yeah, absolutely. If anyone's new, if this is like the first time you've ever watched Yield TV, or if you're new to DeFi crypto, just make sure you don't apply single metrics to the way that you're understanding projects. And this is, I guess, coming from the standpoint of if you're looking at them, thinking about the value of those actual protocols. I tend to focus again normally more on like, here's how you participate, here's how you put idle assets to work, yield farming. One more point on metrics here, just cryptofees.info is really interesting. I would love to see this in CoinGecko listings eventually, but this is really interesting. I guess, like, do you have any thoughts on this, Bobby? Like, we've seen the fees that are generated for the Ethereum network have been dwarfing Bitcoin, and I normally celebrate that, but I'm also like recognizing that fees have been very high, and that means gas is high, and that means we've all lamented, are we pricing out all these new users? And the answer is we are pricing out quite a few people.
Definitely.
So anyways, any thoughts on basically, I love the way these guys frame it. There's tons of crypto projects. Which ones are people actually paying to use? And you can go through these, and it's everything in pink here is on Ethereum. Anyways.
Yeah, I think it's an interesting idea, something for us to investigate more. There's just so much work to do. It's just like every day for us, it's like, do we do this, A, B, or C? Which do we prioritize and which do we go? But it is an interesting idea. So thanks again, for sharing this. We'll discuss further with the team and all as well.
Absolutely. Bobby, so given like the time we're living through where, DeFi is depending on like looking at DeFi Llama there and DeFi Pulse, and knowing I know that I think they both are attempting to not double count, and they're doing that. But DeFi Llama, I noticed, did have Binance Smart Chain projects. So if we include it all, like I think we're at like 54 billion in total value locked. What do you think people should be doing, or maybe what are you all doing to really capitalize on this moment? Like, what is it that we all should be doing to take advantage of the fact that more people are looking into DeFi, more people are asking what it is, including institutions like you mentioned? There's institutions that were quoting the 5.3% DeFi of the global crypto market cap.
I think the key thing would be to kind of like continue learning. There's so much things going on in crypto these days that it's really hard to stay up to date with all the different projects. I remember when I started in 2013, it was possible to read every single article written on Bitcoin for the day. These days, it's just impossible. So I don't know if maybe what I would say is like pick a few projects that you kind of like and go. Maybe you can pick a project that is highly thought about by everyone, right? Pick any top DeFi projects in Ethereum. Or if you're more adventurous, you can go to BSC, but that's more risky because we don't know whether they will survive or not in the long run. But the Ethereum ones are pretty solid, like the Uniswap, SushiSwap, Aave, Compound. They seems pretty strong. So pick a few of these and go deep. Understand everything, like read their white paper, read through every single governance proposal, join their governance calls, understand the differences between these different protocols. Like if you can explain the differences between Uniswap and SushiSwap, the differences between Aave, Compound, and Cream, and know why are they different, how are they different, understand the metrics behind them, which is cheaper, which is more expensive, on what metric, on what basis as well. I think you'll go far, like going deep into each project. But if you have a surface level understanding of a few projects and you try to cover like hundreds of projects, like I think that's tough to have an edge, because what you know is as good as everyone else in the space. It's kind of like going to CoinGecko and see. But if you have that, use CoinGecko as a start, and then after that going deep into each different project and select a few, then make your bets accordingly, size them up accordingly. Then I think you go far, because I think a lot of people don't realize that the deeper you go into each of these projects, the more you discover, and you start noticing how incredible they are, I would say.
Yeah.
So you thought you know everything about a certain project until you start going into the governance forums and then read their governance proposals. That's where the real gems are. And that takes a lot of time, and I find it really hard to keep up to date as well. I choose a few projects to follow myself, but that's it, right? It's really hard to go deep onto like 500 different projects, but like a few, that's fine, right?
Yeah, this space really rewards anyone who's willing to ask hard questions, have lots of conversations. I want to say experiment. Normally, experimenting is much easier. Forgive me, the fees have been awful the last few weeks, but I do want to remind everyone, if you go to gasnow.org, there's a historical chart of gas prices. And even over the last 6 months, we've normally been under 100 gwei. So hopefully there's some relief on the way. But, I would call myself more of like a super user, less of like an actual investor. And I got to say, as a user, I mean, what you were calling out there, if you were to ask me, like, what's the difference between Aave and Compound? Like, I can tell you just because I've used them so much and because I've seen their governance in action. I understand even like the personality differences between leadership. And, again, I'm not here to ever give financial advice, but it has made it easier for me, aside from like doing my usual sort of yield farming, lending, providing liquidity. It has given me greater conviction in what I'm interested in actually holding as a token, in many cases, a governance token. Why am I holding Aave? Why am I holding SNX? Well, I've seen the communities in action, and I've seen the founders just execute with such precision, and it's just such a cool space, because you don't have to do any buying. You can just hop into Discord, go to synthetics.io, go to Aave, go to Compound, go to any of them, and SushiSwap, Uniswap, whatever. You can basically go in and talk with the founders, or at least like the core team members, and that to me is radical. That is one of the most insane things about the crypto, namely DeFi community right now, is the accessibility of the team. I mean, I can tell you, if anyone wants to, not that I should be a special person you should want to talk to, but I'm always in our Discord and Zapper. The only reason I'm not is if I'm here doing an interview. So, it's a special time. Just if you're willing to like speak up, like you can really make a difference.
Yeah, I definitely agree. Like going and spending time in the Discord to see what's going on in the space, that has a lot of value. A lot of things. Not enough people spend time in the Discord. I mean, I try to, but it's just a lot of time and effort to follow for many projects.
Yeah. By the way, too, I'm realizing we probably should wrap up soon. But Bobby, one thing we didn't cover is the farms page. Did you want to show that in CoinGecko? And my question for you is, I was curious, how you start to prioritize or think about all the farms that you guys show. We have like a mini farms page compared to what you guys aggregate there. On zapper.fi/farm, you can actually take action on it. So with ours, you can stake a token or an LP. So there is like the ability to hop right into that opportunity. But I love this thing, the way you guys organize it. Here we go. Yeah, talk me through what is this page?
Yeah, so this is the yield farming page for CoinGecko. So you can access it by going to markets and clicking on farms. Basically, yield farming got like, it was kind of big alpha. I mean, people were giving out 1,000, 10,000% APY, kind of ridiculous at one point. But so yeah, it was kind of a good way to make money, and we decided that we want like to know which are the top farms at this point in time as well. So there are safer farms, for example, Aave, Sushi, 1inch. These are like the more popular farms. So we sort it by total value locked. So you can see there are close to $1.7 billion behind Aave, wow. Close to $1 billion for Sushi's WBTC ETH pool. I'm personally farming the 1inch WBTC ETH pool. There was the liquidity mining reward. So it's paying about 30% per year, which is not bad, I would say. Yeah, Badger has this as well, Bun Bridge. So yeah, pretty much we aggregate all these different farms. There's a few strategies behind yield farming, right? But yield farming requires you to have a significant amount of capital because, well, 30% per year may sound a lot, but I mean, during a bull market, 30% in a trade can take place in a day, or when you buy the dips in a few days' time. And the gas fees are not helpful either, right? Like putting into like these are usually more complex smart contract interactions. So it will cost anywhere between $70 to $100 per transaction these days. So if you're using only like $1,000 to farm, like I think that's not a very efficient use of money. Like you probably need at least, I used to say at least $10,000 a few months ago, but I think you probably need more than 10,000 these days to make it really worthwhile to farm these days. Yeah. And then we have a degen mode where like we start Comic Sans and the Strong Gecko here, where we have farms with paying over 1,000% APY. So yeah, Mirror Protocol seems to be the one that's paying pretty well. So MIR, UST, they have this like Google synthetic mirror Google stock, Alibaba, Tesla, and so on, which is tied against US dollar, UST, which is their stablecoin on Terra protocol, and it's all paying over $1,000, 1,000%. Yeah, Harvest Finance as well seems to be doing quite well. So yeah, but not as much as what it was. And generally, this degen stuff, they're more risky in general. But you have to monitor them closely. Some of these farms that pays high APY, they may only last for a few days, and then the coins get dumped pretty fast. So I mean, different people have different strategy. I kind of don't have the time or don't want to keep shuffling between the different farms every day. Got a lot of things to do. So I kind of generally go after farms that have high TVL, that are safer, that pays a pretty stable return. 30% may sound pretty low for most DeFi degens, but it's still pretty good compared to putting your money in a bank. But I mean, something that you have to do is to make sure that you are aware of the impermanent loss, right? So when you put into ETH WBTC, and if, for example, if Bitcoin goes up 30% versus ETH, then you will have an impermanent loss of 0.8% on your coins, right? Yep. So that's something that you have to be aware of. So a lot of these coins, sometimes it goes down 90% within a few days, and you can see that if it goes down 90%, you have an impermanent loss of 42%. I like to use the APY calculator and see how much I could potentially get. So for example, if I'm farming with like $10,000 and I have a 30% APY, I can see that on a monthly basis, I can get about $250, which is not bad, right? If you think about it. So yeah, that's kind of how I kind of look as well on this calculator. I click them and count.
I think a few like simple tips for anyone who's getting started is go to something like go to this page. check out zapper.fi/farm and search for tokens that you already hold. That's first, because you're already sitting in that token, which is a good thing. It means that you clearly have some sort of conviction about it. The second thing I look for is, are there like asset opportunities, especially if we're talking about a liquidity provision that's involved, or basically AMMs. So I look for, I love the, like the Curve synthetic ether pool, or there's actually quite a few of these now on Curve, where you can put in ether and you're a market maker for ether and some derivative of ether. Stable coins also are really popular. And then I'd say the third thing is the reward token. Whatever it is you're earning, if you have no intention of holding it, if you have no interest in it, if it makes you uncomfortable, if you think that it's a worthless token, it doesn't make any sense to participate. Like I like Curve because I like to earn with like assets with tokens I already hold. And I think that the Curve token is a token that I would like to be holding, because I think that Curve is a really powerful protocol. So I think those three guidelines, that'll save people from a lot of trouble.
Yeah, I definitely agree. And I think for beginners, the stablecoin pools are probably one of the safer ones. Like if you have USDC or USDT, even just splitting up your USDC into 50-50, using Zapper, of course, you can kind of zap in that your USDC into a 50-50 USDC USDT pool onto Uniswap, for example. That would be pretty useful, and for you to understand any use, probably around 30%. I'm not so sure what is it on Uniswap these days, but on Curve, I think you can get about 30% these days on stablecoin pools. There's a few stablecoin pools, algorithmic stablecoin, Frax, USDC, USD. I like Frax USDC. I'm doing that farming.
Frax is interesting. I'm not involved in it, but it seems to keep popping up in conversations with really smart people. So I was like, all right, I guess I got to look at it more.
Yeah, I'm a fan of Frax, so I'm farming that. But it's risky. Some of the algorithmic stablecoins, like I was doing basis cash against Tether. I have some ESD against USDC. I think those things went down a lot. Those algo stablecoins didn't hold its peg. So I'm back holding these farms now, right? So ESDs, I think about 20 cents against $1. So the impermanent loss is high, and regardless of whatever they say, that it aims to be pegged to $1, which is it seems pretty safe, ESD against USDC. But when the peg breaks and the coin goes down to 20 cents, then there you are. What you thought was a safe farm, it actually turns out to be a pretty risky farm, because now you're hit with a pretty heavy impermanent loss. And I don't know, maybe it'll go back to $1 at some point, but you have to wait till it goes there. That could be 1 month, 2 months, 3 months, and the time when that is wasted holding these LP tokens, which you couldn't use your money to do some other trades, and that there is an opportunity cost in these things. And with farming as well, when, for example, if you use ESD's contract, so far it's good, but there's nothing stopping them. I mean, there could be a case where there is a hack one day on a smart contract, and then the funds are drained, and then you lose the funds, you lose all your funds again. So depending on your risk appetite, if you don't mind YOLOing, it's money that you don't mind losing, then it's fine. But if it's significant amount of money and you're worried about it, you may want to consider only participating in funds where you can buy insurance from Nexus Mutual or Cover. So that's a pretty important thing, right? Because if you are gaining 30% but taking on a risk of losing 100%, that's a pretty big risk, right? So everyone's got their different risk appetite, and you just have to see and take the appropriate measures to kind of lower your downside risk if you are afraid of those things.
Yeah. I recently talked to a friend who clearly has just a lot more money that I would dream of. But he was saying that he doesn't put money into anything that he isn't able to insure, just because we're in whatever part of this market cycle where there's big opportunities, but it's a part of his risk management. And that was exciting. Actually, in the last week, I feel badly for the Urine, community having an exploit. I feel badly for anyone who would have potentially lost money or did lose money. But there were some like crazy like positives that came out of it. There was about 2.6 million paid out to 17 of 19 holders of Nexus Cover. So DeFi insurance works. Cover Protocol also had a number of payouts. I don't know how much the amount was, but they had a successful payout. And so I was like, hey, like, we're making progress. I mean, I'm not brushing under the rug like the exploit, which Urine actually went and opened up a vault and I believe is paying everyone out. So there's actually some people who got a payout from Nexus potentially, and are going to get a cover and are going to get a payout from Urine. So, we're getting better. Insurance is really important to the future of DeFi, and to me, it's like something like wallets. Wallets keep getting better; they become more user friendly. Next thing we got to tackle is fees. Ethereum with ETH 2.0 is in phase 0, and that's coming. We've got L2s that are becoming more ubiquitous. We've got loop ring DEX that works very well. Curve is on ZK Sync, but hasn't launched that yet. They've been building on it. Synthetics is on phase 0 of like a 5-phase process to move to L2. So you can mint SUSD now and earn with Synthetics, and then Uniswap is apparently building on Optimism as well. So all sorts of cool stuff going on. Bobby, so I want to wrap up with you. One last question for you. Any books that you've read lately that you'd recommend, or it could be something that maybe you've watched, but something that you think would help those of us who are, trying to learn more about the DeFi space and whatever, maybe take lessons from something else outside of DeFi?
I mean, definitely DeFi. Read our How to DeFi book. Crypto Assets is a pretty good book for beginners. I've read that book. There's a few other I think Bitcoin Standard. I think I heard good things about that book. Ethereum. I guess if you are more technically inclined, like the Mastering Ethereum by Andreas might be a good book to start as well.
Yeah. That's a great one. I actually recently I'm almost done with it. It's called Devil Take the Hindmost. It's like a history of speculation over the last several hundred years. It is very interesting. I mean, especially Bobby, your journey going back to 2014 in crypto, like you'll laugh at it because it's like hundreds of years of speculation in the markets, and you're like, I feel like I've lived through multiple cycles of this. Just so, well, I want to remind everyone. So make sure you follow Bobby and CoinGecko on Twitter. If you've been living under a rock, go check out CoinGecko at CoinGecko.com. And just thanks for tuning in. And Bobby, thank you so much for your time. If anyone watches this in the future, he's joining us on. Today is it's the eve of, we're going into Chinese New Year. So just really appreciate it. And please tell your wife I said thank you.
All right. Thank you very much. It's a great pleasure talking to you on UTV.
Awesome, man. Yeah. I look forward to having you back. And everyone, we will not have a show tomorrow. We will have a community call at 2 p.m. Eastern for Zapper this Friday. So feel free to join us. Love to have you come to the open forum and ask questions about DeFi. Bobby, I'm going to hit the outro video. So if you have any questions, we'll be in a green room in like 2 seconds. So thanks so much, everyone. Bye. Have a great day.